Leanne Myles, part of your team, is here. Leanne's an associate mortgage broker. Sounds like a fancy schmancy title to me, Leanne. Is it?
It's a new title, new licensing in Nova Scotia that we have to abide by.
Oh, yeah?
Yeah.
What do you do? Tell everybody about it.
They brought in new rules recently, and
Who's they? Stop being so vague.
okay, the government of Nova Scotia
Okay.
brought in new rules.
The province.
The province. Mortgage brokers had to complete a course, 13 modules, and then we had to write an exam. It was about a 4-hour exam.
And how did you do?
I did it in half an hour, and I'm pretty sure I only had one that I didn't make right.
Oh, is that right?
Yes.
Good for you.
Yeah.
So is that like confidence or skill, or you just feel like you really, knocked it out of the park? I know you did a lot of studying.
I did a lot of studying. I put the time in, and what I didn't know, I learned, and the only one that I didn't know is the one with the calculation.
See, this is why I ask the questions, not him.
I know. I just love taking over, though. Don't you think?
Well, yes, but the audience may not. However, to that, tell us about Leanne. What made you decide now is a good time to bring Leanne into the conversation?
Well, I think that we've always wanted to bring, some guests on the show. And I think, for Financial Literacy Month, it's good to bring some other perspective. I mean, our audience has heard me talk about mortgage lending for years. Let's bring in a little bit of other perspective.
Yeah.
And, team is not just one person, right? And I think that's so important. And Leanne really is very amazing with what she does and the relationships that she has with her clients. And I think in some cases, Leanne gets things done that Clinton wouldn't even try to get done. So, hats off to Leanne.
Give me an example of that. Leanne, you tell me what you think that you would get done that Clinton does not get done.
There's a few products that I'm very familiar with on the alternative side, as well as with some other lenders. I have a couple right now buying a home. They both work part-time. They don't have pay stubs yet, but he's got a $5,000 pension, and they're buying a home for $450,000, and that's been approved.
Okay, so alternative side, what exactly is that?
Alternative is when you don't fit traditional lending, and maybe your income isn't sufficient for a regular bank. Maybe you're self-employed. You work on contract, that kind of thing. We take those people to alternative lenders.
So that's really what that's one of the things that sets you apart from just somebody going into their bank branch, whichever it might be, and saying I want a mortgage and going to the corner office and doing that. This is what separates, and you've been talking about this. So I'm not going to ask you to mention it anymore because we've heard you say it enough.
We've heard Clinton talk.
That's right. But Leanne, this is kind of what sets you guys apart as to why you guys can do what other bankers can't do, or what bankers can't do, right?
Absolutely. Yeah. And just having that knowledge and that, all the different products that we have at our access and learning them inside out so that you can deploy them in the right moment. Yeah,
absolutely. 100%. So what do you think when it comes to Financial Literacy Month? You've dealt, like Clinton's talked a lot about this, but what would you like people to know? What are some things that you just time and time again you think, man, I wish people should know more about this stuff?
Okay, so first-time home buyers, millennials, it's the rules of 222, and that's something that I think that many young people don't understand. They come to me, they've bought a car, they feel really proud, they've got a couple of student loans, but they've never had any sort of revolving debt. And so when you're buying a house with 5% down, you're using the insurer, CMHC, Sagen, Canada Guarantee, and when we use those people, they want to see us have revolving debt on their credit bureau. So when you're 18 years old or 19 years old, I think it's 19 in Nova Scotia, before you can, start credit, you need to start to build 2 credit cards. You need to get those.
This is revolving debt that you're referring to.
Revolving debt. So a line of credit or a credit card.
Yeah.
You need to have 2 of those. You need to have them up to $2,000, and you need to have them for 2 years.
Right. So I guess some would say when you're young, why would you need all of that stuff? Because some will be irresponsible, and it's not a good ending. Right.
And that's okay, because the bank doesn't want to lend that person the money anyway if they're going to be irresponsible. You have to learn how to manage that debt to prove to the bank that you can do it. It's like a game. And if you know the rules of the game, you can play the game. If you don't know the rules, you can't get in the game.
Right. So how would anybody young know this? They wouldn't generally.
They wouldn't generally. I think Clinton does a great job.
You know what? They've made a lot of mistakes. Like, Leanne, you've seen this. And I think some of the alternative lending that you have done is maybe, Todd, like it's a result of, making mistakes when you're younger.
Absolutely.
I would say for me, I don't know about you, Leanne, but a lot of the issues that I see on consumers' credit bureaus are student loans, cell phones, and the smallest little credit card accounts. People don't feel like a $10 payment is important, which I think is just, I don't know. It's around education.
It's education, and it's also getting that education in the right point in your life, because us telling people, you know, when they're 17, 18 years old, they're hearing it, but they're not hearing it in the right moment. So I think getting the messaging out there at all times, because we're not hitting the people maybe at the point in the life when they need it. And by going on repeat and explaining this stuff, we'll hit them, and maybe it'll come into their minds that they should actually, you know, take action and do this, right?
And start building it. And I mean, maybe that's the goal here, Todd. And, you know, Leanne, like, we're speaking to people, maybe young people aren't listening to our show. You know, maybe there's not a lot of 18 and 19-year-olds. Maybe they are. I don't know.
Yes.
But maybe their parents are, to be like, hey, kid, you should get a credit card, and maybe make sure that you use it responsibly. Use it and pay it. Use it and pay it, right?
You need to get two, because I have had many people that have come to me with one credit card, maybe with a $4,000 limit, and it's just not enough.
Yeah. So if somebody gets a credit card at that particular age, they should be using it to get a points card, use it and pay it off on a monthly basis, or
What I tell
should they
people,
not use it?
I wouldn't use it as money. I would use it to, I would set my credit card up to be fully paid off at the end of the month.
Oh,
so
that's
that
what
way,
I mean, but use it on not carrying a balance, but have it active. Don't just get it and put it in filing cabinet.
Yeah,
and don't
you
use
need
it.
to
no,
use it.
you need to use it, but don't utilize it any more than 50% of the balance.
Right.
So if you get a 2,000 limit, never go beyond 1,000, and that includes the interest.
Yeah, because I think the one key is whatever reports on the statement is what reports on the credit bureau.
Right. What about that TELUS, Eastlink, those types of things?
Make it automatic, I think.
But that's all part of this revolving debt?
No.
It? It's not.
No, your cell phone does not form part of that matrix.
It does not. But however, it can hurt you, can it not? If you got payments
Absolutely.
not made.
Yeah.
So that doesn't seem fair. It's not part of the matrix. But if you're not making the payments, it's going to be punitive. I don't think that's fair.
It's not fair. The rules changed about 5 years ago. I will tell you, like 10 years ago in this industry, if we were, you know, dealing with a client and cash flow was an issue, you know, we would say, well, just don't pay your cell phone bill, but pay your credit card bill because your cell phone's not reporting. Well, that stuff is reporting now, so it doesn't give you the points, but it you know, you need to pay your bills. If you're going to take something on, you need to be responsible and pay it.
What about a new car purchase, like something small, lease, something like that? Is that a good thing to do?
It is. It shows that you have the ability to pay, but if you don't get those revolving debts,
But
you're not in the game.
Is that a revolving debt, though?
No,
That's
it's
an
not.
installment loan.
It's an installment loan.
I see.
So I think it's about the mix, right, Leanne? Like,
Yeah.
it's about having some installment. It's about having some revolving. And it's about managing the credit appropriately. You know, you don't want to go above that utilization. You want to make sure you make all your payments. And, you know, Todd, I think cell phones, they're notorious. Honestly notorious. But what I always say to consumers is get it on an automatic payment. Maybe that's something that comes off the credit card, and then you pay off the credit card once a month.
Yeah.
Absolutely.
Called a pad, is it?
Yeah, like a pre-authorized debit
Yeah.
or pre-authorized payment.
What about insurance payments and all that? That's not part of.
Doesn't get
revolving.
reported.
I
So
think
it
the
doesn't-
only time and maybe that we can use some of this additional stuff is if there is really thin credit. And sometimes it's new to Canada, or, you know, they'll allow us to use things like rent payments to kind of supplement.
or Nova Scotia Power. So if I've got somebody that is new to Canada, or even a student, and they've had a credit card maybe for 3 years, and it's a $4,000 limit, and maybe we can prove that they have 12 months of paying their rent, we can use the rent as a supplemental. It's harder to get it done.
Right.
If you want a sure shot at getting a mortgage, follow the rule of 222.
Well, I would say that's excellent information. And guess what? We are plumb out of time with you as a guest. What do you think of that, Leanne?
Wow, that was fast.
Time flies.
Time
How do
flies.
people get a hold of you, Leanne?
They can call us here at the office, 482-2770.
We want them to call you, though.
They
It
call.
all goes to the same
It all
place.
goes to the same place, and
But
the
ask
girls
for-
will get me.
But ask for Leanne Myles.
Absolutely.
Do you have a nickname?
Not really.
Hey, you, just call me.
Thank you, Leanne.
You're welcome.
That's Leanne Myles, and she's an associate mortgage broker. Give them a call here. Is it Centum? Is that what we're calling you?
Centum Home Lenders are franchise, but we really kind of refer to it and we answer the phone as Clinton Wilkins Mortgage Team. And, you know, we are a team and we all work together. So
You got it. Okay.
Thanks, Leanne.
Thank you. We'll be right back on City News 95.7.